Hi, welcome back to another monthly market update. I'm Ryan Deeter with Real of Ohio, and in this video, we are diving into the data that the Columbus Board puts out for us. We have the year-end data we have the data from December of 25, meaning we have all the months now. We can look at the year-end date and how 25 did overall. We can look at the data, and we're going to look at that to help us understand what's going to happen in 2026. In fact, if you haven't watched my 2026 forecast. It is available now on YouTube as well. So go back, watch that if you want to know kind of a deeper dive. It's a real deep dive into my predictions of what's going to take place in 26. If you're wanting to make a decision and what to do in 26, this might be a helpful guide for you. But if you just want to stay informed on a quick snapshot of what's going on in the market today to help us understand how to make decisions in the future, this is the place for you as we dive into the numbers. Okay, as you can see here, I've got the data pulled up from 25 of December. And on the right side here, the chart is going to show us year to date. And that's kind of what I want to focus on today, since now we have all 12 months of 25 compiled here. And it's going to show us, 25 compared to 24 as a whole. What we usually compare is, how did December do to last December, which is fine. It's a good analysis of how this month did compared to last year at the same time. But, sometimes it's good to just reflect on how did, the last year to date do, how are we doing overall, because some months can skew. And overall, when you have the Columbus region, it's going to come down and be fairly, accurate month to month. When you talk about, when you break it down into certain areas, some areas, have really solid months and some areas have, not so much. And all of it depends on, maybe a really nice, expensive house sold in one community that skews the numbers versus, one really crappy home that sells in a community that brings the numbers down. And so when we compile it as a whole, that's why I look at the data as a whole versus just one particular area. And this is kind of coming, even further saying, well, let's look at year to date. That's what's going on year to date, what's going on overall, what are the patterns throughout the year. It gives us an understanding what what's taking place. Now, Columbus is very cyclical, seasonal, and if I'm going to zoom down to this chart that I do almost every week or every month, sorry. As I focus on this chart, and as we know, this is why I like to focus on month to month, because we can kind of see what's going on, and we're seeing these patterns again. Anyway, we're gonna look at year to date because it's just the last month. We have 12 months now. And if you haven't watched my prediction of what's going to take place, I did not have this data when I wrote that or recorded that as well. So take that in mind. But it didn't skew it a whole lot. December was kind of right in line with the rest of the year, so it kind of came out very similar. So, anyways, as you can see here, we had a little bit more closed sales, 3% more than we did last year, which means the number of sales are ticking up, which is not a bad thing. If in fact, in COVID years, before COVID, I mean, in 2019, I think I have it pulled up here. What is this? 2019 here, you see we still have less sales than we did in 2019 than we did in 25. But, it's getting closer and closer, just a couple thousand difference now. So we're getting closer to those pre-pandemic years of about the amount of home sales, but at the same time, we saw, during those years, we saw a population increase. So even though we're seeing less home sales, we are seeing more people in Columbus, which is what's keeping really the market moving forward and not backwards. A lot of areas across the country, in Florida and Texas, we're seeing things go backwards. And even though we have more inventory here, we have more building that took place the last several years. We have population growth without a whole lot of, without a ton more homes being sold, even though and not a rush of inventory. We have more inventory, but not an explosion of inventory per se. So, inventory is up, of course, and we can look at, unfortunately, they don't show this year to date, but, because it's just, what it is month to month. But you can see inventory is up quite a bit compared to last year. So almost, over 14%. But even going back to 19, we're not too far off. Really the 18 mark and 19 mark at 3,840, 4,041 and 18. Coming back now, we're at 40, so just a couple hundred more homes for sale, which is, very marginal. And when you don't have a huge amount of homes for sale already. So anyways, even though it's a high percentage, it's not a ton of homes per se. So with that said, modest growth this last year. What I like to focus on are these three numbers holistically. Average price, average or median price, and average price per square foot. I look at those holistically because it's, one of them doesn't paint the whole picture, but they all three kind of do together. And so looking at those and you take the average is kind of where I would say. So we're roughly, around the just 2.5 to 3% mark when it comes to growth in Columbus region. Now, I will say this is, just like nationally, it's all over the place. It is all over the place, locally as well. Some areas are seeing gains and some areas aren't. Some areas are seeing setbacks. Areas that saw massive growth. I mean, just like, the south sides, the inner city that saw a ton of growth in the last 10 years, we're seeing that correction take place. We're seeing a little bit of correction there and either flatlining or even a step backwards in a lot of areas. So keep that in mind if you're one of those zip codes that saw 200 300% growth where you're seeing properties sell for 10 and now they were selling for 200. Those are things that we're seeing those areas start to correct, the south sides, even the inner city somewhat, where the suburbs are still seeing some modest growth. They're seeing strong growth, and into Delaware County, we're seeing some really strong growth as well. And I can show you, I think Powell is one of the strongest growing areas. If you look at even in the country, let me pull up Powell here. You can see that that is one of the strongest growth areas in the country. They saw double digits growth in the last, especially average price and median price. The average price per square foot was a little bit more modest, but again, taking those holistically, we saw a lot of higher end properties still selling, even though they may not have been selling for a ton more price per square foot, but they were still selling. They're selling for more they were last year per square foot. So that's why we're seeing these numbers elevated quite a bit. When the modest numbers of that's what's keeping these, it's helping these numbers be modest as well and growth some of those areas. But we're also seeing a variety of growth in certain areas. So that's why it's really particular, really helpful, and you really have to be particular about if you want to know what's going on. These numbers are helpful, but they don't paint the whole picture. And you need to have someone that can go with you and say, okay, and this is provided to the public where you can go into your county, municipality, whatever it is, school district. It breaks it down, and this is something that's kind of unique. I've been told to the Columbus market that the Columbus Board of Realtors puts this out for the public, and so this is a really cool thing that they break it down so well. And so if you're looking at a certain area, you need to focus on your area versus just a smattering of the whole region. But it's also good to know, okay, what is going on in the region? You just want to stay informed on the region itself. This is a helpful tool as well. So I don't throw this out the window. It's just something to consider. So you are seeing that prices, percent received, original price received, and also percent of last price received is very similar. We're talking marginally 1% difference than last year. We're seeing things really reflect the 24 model. And so, days on market's up quite a bit, which means that even though people are still getting the price they list for, or the price they come down to, close to that price, full price, and so it's taking a little longer. So sellers just need to be more patient. Buyers are waiting a little longer to make offers, and that's just the case. So and we're seeing that out there pretty regularly. We still are seeing, I will tell you, we still are seeing houses that check the boxes and that market and hit the market right are still selling really quickly and for top dollar. And a lot of it depends on are people pricing it well over what it would have last year, what they would have done last year. Are they pricing it modestly? Are they pricing it with quote unquote, fair compared to what the growth has done? And or are they trying to get 10, 20% more than what they would have priced it last year? And buyers are, being savvy right now. So, and then conditions really driving the market. What's the condition? Does it need work? Does it not? And this is where it's really difficult for the data to really grasp of what kind of homes are selling. Are homes selling that are ready to go? Are more people putting money into houses to sell them? Are they just not doing repairs and trying to put them on market still? And so those are hard to really for the data to understand. That's why having someone that's been in homes, you need to go in. If you're looking to buy a house, take some time to look around and say, what kind of homes are actually selling and how are they selling? The homes that are ready to go and are priced fair are selling quickly still in most areas. New listings are up, but not tremendously. And they're obviously their price tag is always insane. Um, price tag and they're sold for more. So, anyways, very long story short, 2025 was very modest growth. I think, my assumption and what I've been telling people is that we're in kind of that correction period where, unfortunately for Columbus, you can still come out on top in this market and during this correction. Some areas in the country you're not. You're losing it. But if you bought a year ago or even 2 years ago, do not expect to make a big gain. In fact, you're probably gonna, at the time that you think about, your expenses and fees, you're probably going to lose money. And that's just, reality of most markets when you buy in such a short period of time. Real estate's, typically a long hold play. For whatever reason, if you just need out of your house for life reasons, for things that happened, and or you're trying to invest and sell, I wouldn't expect, a ton of gains. And if you come out on top within the last 2 years, that's fantastic, for you, but it's not as common as it used to be. The days of buying something and selling it in 2 years, for a massive project, unless you're doing the work that it takes to do that with, the repairs and you're buying right and you're repairing it. We're seeing flips that are done well and done right still work. We're starting to see the fundamentals come back. The last few years it was very difficult. Now, the difficult part with that is finding property at a price that allows you to make those repairs and to do it right, because prices are elevated in construction as well, and they're probably not coming down. So that's where the housing market has really been adjusted, and buyers have caught on, and sellers as well, of the cost of repairs and the cost of fixing things up. And that's kind of slowed buyers down from just buying anything. And it's also caused sellers to, realize when they bought something, oh, stuff costs more to get fixed up, and they've realized that they maybe been over their head or spent more money than they wanted to on a property, and or uh, just kind of have to eat some of that cost. So, anyways, that's kind of where the market's at right now. It's slow, modest growth. And long story short, if you haven't watched my prediction show for 25 or 26, I'd highly recommend just taking a peek at that. But it's a little bit longer of a video. And what I would say is that I expect very similar numbers from 25 to 26. I expect slow, modest growth for the next few years. And then maybe, 27, 28, 29, we start seeing, growth pick back up to the 5 to 10% range, where we see, that some of that industry that's promised to come here start actually opening up and start hiring and start, making an impact in the Columbus region. So we're kind of not seeing that a whole lot besides the construction side right now. It's kind of in the pain period, the correction period overall, with interest rates and prices elevated and all that. So hopefully this is helpful. And if you want to dive into your location, dive into your information, happy to do that with you. Thanks. See you next time.